Welcome, Steve.
Thank you, Caton.
Very good to have you here. And I know it's a very busy time in financial services too, given the earnings season is on. And so very much appreciate your time. Steve, let me ask with the very big question, which is related to the world and the pandemic. The world's just been through one of the most traumatic experiences in terms of economic and healthcare, with over 4.5 million people dead. This is a tragedy, of course, for the whole world, and we've all shared it. What are the themes that strike you that are reinforced by this pandemic?
Thanks. Yes, it's, as I reflect on the pandemic, one really overarching theme from my vantage point is just the constant harsh realities, and on the other hand, the optimism for progress that the pandemic revealed. So on the one hand, the harsh reality of the fragility of the world and the global ecosystem, that the whole world could be fighting a virus together. Millions of lives lost, as you said, disruption globally. And on the other hand, the optimism of working together globally, getting a vaccine, really fighting this disease together, really gives the optimism that we have to really embrace the harsh realities and the interconnections of our global ecosystem. And we can do it if we embrace them. And I really think it reinforces the Sustainable Development Goals are critical underpinnings to a stable, well-functioning global ecosystem. And I think the pandemic was a very harsh reality lesson in exactly that. I would say for the asset management industry, if I maybe go a little more micro, it really highlighted the interconnection between the Sustainable Development Goals and the capital markets. And the role, if you think about the role that government, central banks, and the public sector played in stabilizing the world in the face of the pandemic, and then the role the private sector played on testing, on vaccines, and then you think about the incredibly acute and very differentiated outcomes, in different industries, different companies, and most importantly, the different individuals. You had technology companies thriving through this, and you had airlines, hotels, consumer businesses struggling mightily. You had millions of individual employees struggling in some industries, thriving in others, and obviously everybody dealing with very different family circumstances and unfortunately differentiated impact on those most in need around the world. So I think it really highlighted for the asset management industry, we have an important role to play as fiduciaries, as capital allocators, in understanding the long-term impact of all these micro decisions we're taking every day about what companies to invest in, how to engage with them, and how the entire system and its stability relies on our role as capital allocators. We have a small role to play in this big system, but we need to take that role seriously, and it really connects exactly to the Sustainable Development Goals.
Steve, I want to drill down a little bit more with you on that, because every time there's an analysis of what is it really going to take to meet the SDG goals, the answer comes to the asset management industry and the role it needs to play, and the pivotal role it needs to play. What are the challenges? What role can the industry play, and what are the challenges that you see existing? And how is Wellington addressing those?
Yeah, so maybe I'll start with optimism, if you'll allow me. I think there's three main areas we can play a productive role in this. Research, engagement, and capital allocation. So on the research front, again, as an example, we are engaged in a climate science research partnership with the Woodwell Institute, one of the leading climate science organizations in the world. And we're really, understanding more deeply all of the key physical risks around the world: heat, drought, wildfire, hurricanes, floods, access to water, air quality. And we, in conjunction with Woodwell, have built a climate map where we can look around the world and understand the implications for people around the world and for companies and for governments engaging in those areas. So that's an example where by getting better research and better information, we can make better decisions and work in better partnership with the companies we invest in on behalf of our clients. The second big one is engagement. As part of generating long-term returns for our clients, we have been focused on being, very intentional and deliberate about how we engage companies on behalf of our clients on many of the themes and principles underlying the Sustainable Development Goals, whether that's climate, whether that's diversity, equity, and inclusion, as an example. The level of engagement has to keep going up. We're on a very deliberate and intentional path, and I think many in the industry are, and I think we need to continue that. Again, to bring it to life with examples, our portfolio managers now increasingly will have at their desktop tools that provide them with information on the climate risks associated with the companies they're investing in, alongside all the other financial metrics they have, the earnings, the debt levels, et cetera. So it's becoming more integrated to factor in data underpinning the Sustainable Development Goals in the portfolio management process. I believe, as you know, we are one of the founding signatories to the Net Zero Initiative for asset managers. And so that's another way in which we're working with our clients, with the companies that we invest in on behalf of the clients, to really think through what are the long-term plans to manage the climate risks associated with the activities of the company in a very thoughtful, long-term manner. And then an example on DE&I supported the NASDAQ proposal to have companies provide more disclosure around board diversity. We've sent letters to a number of S&P companies as well, asking for similar disclosure. And then lastly, the third element is capital allocation. And there I would say, in the 2013 timeframe, we became focused on taking some learnings from the private equity sector around really investing more intentionally in companies that were going to really promote and help the Sustainable Development Goals. And we brought that to the public markets and created a dedicated strategy where we're investing in companies that are making positive steps in climate, in equality, and really driving the economy in the direction we all know it needs to go, as the Sustainable Development Goals highlight, and really focusing capital on those companies that are really going to help us achieve those goals. And we're doing that more and more. We have now some strategies focused specifically on companies that are making headways on climate adaptation. We have a strategy that we're allocating capital to for clients, which are going to invest in diverse entrepreneurs. So I think there's a lot that can be done in allocating capital in very intentional ways on companies that are really driving forward innovation that underlies the Sustainable Development Goals and achieves attractive returns for the clients. But of course, there are challenges, and you asked about challenges, so I'll just give you a few. I think one challenge is keeping everybody focused on the long term. There are day-to-day pressures which are real for our clients about how they perform this quarter, day-to-day pressures that are real for companies where they're being asked for information on quarterly earnings. And how do we balance those pressures by saying there are some investments we all need to make, there's engagement we all need to do together in order to make sure that the company and the industry and the globe is viable and thriving for the next 10 years, 15 years, 20 years. And I think getting that balance right, I think we all can help. I don't think it's any one individual or one entity, but we all need to constantly bring things back to the long term. And by doing so, I think it will allow us to stay focused on these very important Sustainable Development Goals. Second challenge is data quality. There's a lot of different data sources. It's hard to get very accurate data on location, on carbon emissions. And we're going to make progress there, but I think that's an area we all need to work together. In our case, we're working closely, for example, with some of the regulators to think through what types of data they should mandate for climate disclosures by companies and making sure it's data that will be helpful, relevant, actionable. And then I think we all need to stay focused on the impact of the Sustainable Development Goals. So sometimes you can take an action that might, in the micro be helpful, but it might not be helpful in the macro. So if you don't invest in a company, but that company is still thriving, is that achieving it? It's really about working together with companies, with asset owners, with asset managers in that ecosystem, and really driving towards impact like reduced carbon emissions in aggregate to make that happen. So we're very focused on our role as an engager in this process to really work with everyone and bring everyone along.
And Steve, I think you've highlighted a spectrum of things that Wellington are doing to make sure you're part of moving the whole agenda forward. What happens when you come across a series of companies that aren't meeting what you think are the right things to do in terms of whether it's your criteria or the data sets you've examined, or there's an investment professional sitting at their desk and allocating capital and it doesn't meet the criteria that you've set? What happens then?
So, we definitely take a long-term approach. And I think what we found, and it applies to us as well, there is a lot to learn here. And so we spend a lot of time engaging and really going back and forth with companies and saying, hey, let's talk about this. Let's understand the data. Let's understand what your plans are. And we have found that we've had tremendous traction through that. You're right that, of course, inevitably, you can come across some situations where either there's not a mutual understanding or agreement, or for whatever reasons, a company may not be making as much progress as we would like. So I would say we lean into engagement heavily. But of course, if at some point we just believe that they won't, deliver on our expectations, and we think that it therefore makes the company a less attractive company from an investment and a sustainable development perspective, then we would move that money and allocate it to other companies. But I would say we do that, very thoughtfully and after a very appropriate period of engagement. And it's done one portfolio manager at a time.
Yes. Thank you, Steve. Steve, if we look ahead, what does success look like if we manage to, in a widespread manner, do some of the things that you've said that Wellington is interested in and is pursuing to make sure you're a force for good in the world? But if we do this across the board, how do you see this playing out?
Yes. And you raise a great point. I think success has to be defined by the collective rather than any individual or any asset management firm in isolation. We all have to take seriously our roles, but the reality is that the measure of progress and success has to be done at the global level. So maybe if I bring it to life on the net zero initiative as an example, what gives me some optimism is we were one of the founders with 30 other firms, and we've been working with the Net Zero for Asset Managers group to engage other asset managers. Well, now we have 128 signatories from 30 in less than a year. When we started, there were 25 of our clients that were signatories to net zero. It's now an additional 125. And we're working with many of our clients to support them and partner with them on how to think about moving their portfolios along the net zero journey. If I think about companies that have committed to science-based targets, when the net zero initiative started, it was 1,400. It's now standing at 1,900 companies who are committing to science-based targets. So I think through this engagement of all of us across the industry, we're starting to see progress, and each of us needs to keep bringing the next one along and then measure if we're actually succeeding in getting change in behavior, change in action. And I would say early days, there's so much to do. We approach it with great humility, but there is some positive progress.
Steve, thank you. And I want to draw that together now with the question that's a little bit more about you as one of the leaders of Wellington. And it's obviously an institution with a lot of weight in the market that people look at to see how Wellington is approaching this. How do you see Wellington balancing its need to deliver returns with its need and commitment to doing good, Are these two in conflict, or are you finding increasingly they're not? What is your perspective and experience?
My perspective is they are not in conflict. I think for how we started this discussion, that if one, if you think about having a sustainable, stable global ecosystem where people are healthy and thriving and have opportunities, that is the best environment for companies to thrive and for us to deliver great returns for our clients. So I see it as very synergistic, that us working with companies, thinking about what they need to do to generate great returns for clients, not in 3 months or 6 months, but over 10 and 20 years, is very synergistic with the actions that one takes around thinking about climate, about diversity, equity, and inclusion. If one goes very narrow, short term, perhaps there could be some conflicts, but in general, our clients are asking us to invest their assets for the long term. And I think that all of these sustainable development goals are very aligned with the long-term interests of our clients and of generating returns. Of course, there are challenges, there are hard questions, there are conflicts that could come up from time to time. I believe those are addressable through, hard work, deep thinking, and we will, face those challenges as they come along. But I think at the highest level, the alignment is very, very strong.
Thank you, Steve. I'm going to ask you a question. If we focus on climate change, all the other SDGs will be addressed. But actually, it turns out that isn't really true, because if someone is hungry, if the extreme hunger, extreme poverty isn't addressed because you address climate change, you actually have to address extreme hunger and extreme poverty. In Wellington, you've looked at physical climate risk, and you're recognized for your expertise. Steve, do you look at also the other SDGs to do with people and the hardships they face in countries where extreme hunger, extreme poverty, very poor educational standards are something that beset them? And are you investing in those?
So thank you for that question. And yes, I guess I would echo what you're saying, which is there are, of course, interconnections and overlaps between the Sustainable Development Goals, but they all need to be understood appropriately as well in isolation. And I don't think any one of them will necessarily solve all the rest, even though there are these important interconnections. And if we make progress on some of them, it will help us in making progress on many of them, if not all of them. And I would say to you, in addition to climate, yes, we are very focused on many other of the Sustainable Development Goals. So just to give you one example, a big theme is modern slavery. We have a number of emerging market equity portfolios that are focusing on modern slavery as an area of focus as they manage on behalf of clients. And we are working on a survey we're planning to send to 2,500 companies to engage them on their supply chains and any risks of modern slavery that may be in those supply chains, as an example. So it is wide ranging, as you say, and we have many initiatives underway. We do think climate's an important one. It's one where we've put a lot of energy, but not in isolation to the other areas. And
Steve, do you measure your portfolio's initiatives against the full SDGs? Is there a report that allows you to look at which SDGs you're impacting with the full spectrum of your activities?
We have a few very focused strategies where there is a strong connection made back to all the SDGs, but I wouldn't say that applies to all of our assets. It's only those portfolios where we've specifically said we're going to invest in those innovative companies that are underpinning the SDGs. In other areas, we'll have some measurements like carbon emissions, but it won't necessarily be a full slate of SDG reporting against all the portfolios.
Thank you, Steve. Thank you very much.